Well, a very good morning to you for this bookend to what has been a remarkable and trying year for all Australians, and a pretty tumultuous one too for the Australian economy. It's my great pleasure to be joined for the first time at my EFO by Australia's new Finance Minister, my good friend and parliamentary colleague, Senator Birmingham. I'll make a short statement. Senator Birmingham will also have some words to say, and then we're very happy to take some questions. Today's budget update confirms that the Australian economy is rebounding strongly. Following the biggest economic shock since the Great Depression, Australians are back spending, and they are back working, and they are back moving freely across the nation. The updated numbers are encouraging and better than what was expected at budget just 10 weeks ago. Unemployment is lower, GDP growth is higher, and there are improvements to the budget bottom line. But the road ahead is challenging, very challenging. We have not yet defeated the virus. It still is with us. Our recovery is very much dependent upon our continued success in containing COVID-19. While a number of comparable nations are facing renewed virus outbreaks and new lockdowns, Australians are approaching Christmas with optimism and hope. Consumer and business confidence are back at pre-COVID levels. 85% of the 1.3 million Australians who either lost their jobs or saw their working hours reduced to zero at the start of the crisis are now back at work. The September quarter saw an increase in GDP of 3.3%, the biggest quarterly increase since 1976. Australia's economic recovery from the COVID crisis is now expected to be faster than our recovery from previous recessions. The unemployment rate is expected to recover to pre-COVID levels in around 4 years. I repeat, the unemployment rate is expected to recover to pre-COVID levels in around 4 years. This compares to around 6 years for the 1980s recession and 10 years for the 1990s recession. In today's update, real GDP is forecast to grow by 4.5% in 2021, following a reduction of 2.5% in 2020. There is an upgrade to the budget forecast of 4.25% growth in 2021 and a 3.75% fall in 2020. Australia is outperforming all advanced economies. The euro area is forecast to contract by 7.5%, Japan 5.25%, and the United States 3.75% this year. With 734,000 jobs created over the last 6 months, the labour market has performed better than we expected. Unemployment is now forecast to peak at 7.5% in the March quarter 2021, down from a peak of 8% that was forecast at budget. The unemployment rate steadily declines to 6.25% by mid-2022, 5.75% by mid-2023, 5.25% by mid-24, when it approaches the level it was at the start of this year. We have come a long way from Treasury's initial estimate that the unemployment rate could reach 10% or 15% without JobKeeper. This improved outlook is off the back of unprecedented levels of economic support. The Morrison government has committed $251 billion in direct economic support. Already over $138 billion has flowed to households and businesses. JobKeeper, the coronavirus supplement, the cash flow boost, and 3 economic support payments to pensioners and others on income support have been an economic lifeline for millions of Australians. The faster than expected rebound is flowing through to the budget bottom line. The underlying cash deficit is expected to be now $197.7 billion, or 9.9% of GDP in 2020-21. That's an improvement of $15.9 billion from what was forecast at budget. The total improvement across the forward estimates since budget is $23.9 billion. Payments are expected to be $6.5 billion less in 2021 than that was expected at budget, and receipts $9.4 billion better. There is new expenditure on a range of initiatives, including an additional 10,000 home care packages, the rollout of vaccines, and the temporary extension of the coronavirus supplement. The improved economic outlook has led to an expected increase in company tax receipts and GST collections, and around 640,000 fewer people on JobKeeper so far in the December quarter than was expected at budget. The gross and net debt projections are broadly in line with those at budget, with gross debt stabilising at 53% and net debt declining to 38.3% over the medium term. Australia's debt levels, even at their peak, remain less than half the average seen across advanced economies.